Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Dr. Sadek Wahba, member of the Council on Foreign Relations and member of the Wilson Center Global Advisory Council. And he's also the founder, chairman, and managing partner of I Squared Capital, an independent multi-billion-dollar infrastructure investment company. He also appears as a frequent commenter on global trade and economic issues, climate-related issues, and U.S.-China policy and infrastructure-related topics. He joins me to discuss how trade relations and national security between the U.S. and China could potentially evolve. Sadek, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You got it. And how does the relationship building with China continue into 2024 following President Biden's meeting with President Xi Jinping back in November?
You know, after the global financial crisis in 2008, the U.S. identified banks that were too big to fail, systemically important banks, right? China is a systemically important country, too big to fail. And when you look at some of the growth numbers, the IMF is forecasting China to grow by 5.4, but then by 2028, that growth number is expected to be at around 3.5. We really need to see that China grows at sustainable economic growth rates, which can benefit not only China, but the rest of the world. Unemployment in the US is 3.7, unprecedented. We have youth unemployment at 8.9, in China's 20%. So when China sneezes, the rest of the world catches a flu. And so we need to be able to work with China. At the same time, we have, of course, national security concerns that we need to address first and foremost. So it's going to be a real delicate balance between the two over the course of 2024 and the years ahead.
Let's talk more about that. How do you envision trade relations and national security between the U.S. and China to evolve following the meeting between the two leaders?
Look, the meetings between the two leaders, I think, was extremely positive. First of all, President Xi Jinping did not come out with a strong, I would say, anti-American statement. On the contrary, it was very conciliatory, very supportive, and looking to diffuse any crisis that you have between the two countries. So that, I think, is an important consideration. The second thing is there is a desire to work on economic issues. Unfortunately, trade barriers like tariffs that were imposed in 2019 are not going to come down, given that it's an election year. So I think you need to see two things. Number one, diffusion of any potential crisis during 2024. And number two, a focus on what I would call softer issues, climate, which is, of course, critical, but needs to be addressed, and it's a long-term type of investment, as well as other critical areas. For example, I suggested the creation of a water technology fund that will allow both countries to invest in water technologies, which is a critical element for both economies. We have droughts, they have droughts. We have an issue of climate. They, of course, have an issue. The entire planet has an issue of climate. So we need to be able to address that together. And things like water technology investments could be one of these vehicles.
Let's talk about the infrastructure bill on its second anniversary. How has the U.S. performed thus far?
The infrastructure bill that was passed by President Biden and by a bipartisan Congress is really a huge success. It's one of a kind. And you have not seen something like this since the Eisenhower years when we invested massively in roads. $1.2 trillion have been allocated to renewing, upgrading our infrastructure. The extraordinary thing that the Biden administration, in my view, did was it went to work right away. So you've had immediate effect as soon as the bill was passed. There was a team put together across all 50 states, red and blue, and you can see the progress. One of the reasons we have such a low unemployment that was announced today is precisely because you've had $1.2 trillion that has started to be invested in our economy, upgrading the bridges, getting cleaner water, and it has impacted both low-income households as well as middle-income households. And that's an extremely important point. And you need to be able to continue that over the coming years.
How do we progress in sustainable infrastructure investments stated in the bill?
The challenge is that the $1.2 trillion bill to be able to continue that investment over the coming years. It's important, it's critical, but many studies have shown that you need at least $2.5, if not more, trillion dollars. So there is that gap. And we know that it's going to be extremely difficult in this age of split Congress to pass another bill like the 1.2 trillion. I don't think that's going to happen for quite some time. So how do we address the need to continue to invest in infrastructure? Because we've clearly seen the positive impact it has across states and across households. So I think one thing is we need to encourage private capital to invest in infrastructure. And by private capital, I mean state pension funds, for example, need to invest in the infrastructure of their own states, as well as infrastructure across the US, so long as you can make an adequate return that meets the obligations of the pension funds. So, for example, investing in roads, invested in wastewater, in clean water, in bridges, in tunnels, all of these things that could be done in the context of what I call a public partnership. So public pension funds with public state entities that can work together to be able to invest and provide an adequate return to the pension funds. That's one way to do it. Another one is user fees. We cannot continue to invest through taxation and large budget deficits. So at some point, we need to look at increasing user fees because that is the most economic efficient way of doing that. A third way is to create an infrastructure bank that will be able to channel a lot of the credit into these infrastructure projects. Another one is the encouraging, if you want, the foreign direct investment into the United States. So in the same ways we have foreigners investing in our stock, investing in our bonds, we need to be able to have them invest in infrastructure, which unfortunately is illiquid. It's an illiquid sector. And so we need to open it up through privatizations, through joint partnerships. So that creates a market in and of its own and can attract foreign investment.
All right, Sadek, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.